Well, good morning, good afternoon. Welcome to the September 30 Grain Stocks and Small Grain Summary webinar. My name is Greg Horstmeyer. I'm Editor-in-Chief at DTN, and I'll be your moderator for today's webinar. With me today is Todd Hultman, our lead market analyst. He will be giving us some insights as to what USDA had to say today about our grain stocks. During this event, everyone is in the listen-only mode. You can ask questions, but to do that, you click on the Q&A option located on the bottom right of your screen. That'll open a messaging panel and you can type questions in there for Todd and I. You can do that at any time, and please, as you think of questions, plug them in so that we can see that they're coming. We'll address all the questions at the end of the webinar after Todd finishes his analysis. This event is being recorded, and a rebroadcast link will be on our DTN website within 2 business days. That's at www.dtn.com, which is where you went to register for this event. So with that, we're ready to begin the webinar. I'll turn things over to Todd. Todd, September adjustments weren't very big, but they've had a little bit of a uptick on the markets. Tell us what's going on.
Yeah, they're getting a friendly response today. Thank you, Greg, and thank you everybody for joining us. I always look forward to the Grain Stocks report. As I often mention, I can argue with a lot of USDA estimates when it's based on things we don't know yet, but it's hard to argue with an inventory report. So not that it doesn't have some holes and flaws in it at times, but especially for corn and soybeans, as you know, this September 30 report sets the ending stocks number for both corn and soybeans in the 2023 to 24 season. And then for wheat, the September 1st wheat stocks show us what first quarter demand was like in wheat's new 24 to 25 season. So just trying to clarify that up front so we have a handle. So let's take a look, see what USDA said today. And before we get to the grain stocks, I debated whether I should even mention this, but I thought, well, it is a revision. And so let's just talk about it. As often comes with the September grain stocks report, sometimes they find a discrepancy or unexpected inventory. And so they have to go back and adjust their production estimate from the previous year. This year, both of those revisions were very tiny. For corn production in 2023, USDA revised the estimate just 1 million bushels less. I mean, as I say, almost not worth mentioning. For soybean production, it came down just over 2.5 million bushels. So instead of 4.165 billion bushels of production, USDA is going to now say 4.162. Why does that happen? Well, you know, USDA goes through its estimating process all year long, and when we get down to this final inventory report for the season, sometimes there's a bit of a surprise, but in this case, not much of a surprise in regards to having to adjust their previous production estimates. So with that out of the way, now we can take a look at corn stocks for today. Corn stocks being the bullish news of the day, coming in less than expected. 1.761 billion bushels. That is less, about 93 million bushels less than what the Dow Jones survey was expecting. They were looking for 1.85 billion bushels. But of course, it is more than a year ago. Last year at this time, we were looking at ending stocks of 1.36 billion bushels. So this new total is the most in 4 years. The thing I find interesting about today's ending stocks number for corn, though, just for kicks, I went back and looked at the initial May estimates a year ago for what USDA said this season would have for ending stocks. That initial May estimate was 2.22 billion bushels. So by the time we get to the end of the season, we're actually 462 million bushels less corn on hand than USDA initially estimated in that first May report. So that's quite an adjustment, and I attribute it to the power of cheap corn. As we fell below $4 a bushel this year, corn has been moving like crazy, and we've pointed that out in numerous ways. Export sales were up strong, ethanol production was up strong. We actually have record corn demand now for the 23-24 season, it's almost 15 billion bushels, just shy of the 15 billion bushel mark. So even though we're expected to have a 15.1 billion bushel crop in the new season, that's not looking so big now when you consider how much demand we have at these very cheap prices. How about soybeans? Soybeans came in a little less than expected. The trade was looking for 354 million bushels. USDA's number comes in 12 million below that at 342 million bushels. That's up from 264 a year ago. And like corn, this is also the most in 4 years, but a fairly reasonable number given that we're expecting that we had a big crop last year and also had a lot of competition. Brazil had a big soybean crop last year, and that really hurt us on the export side. So we're coming in with 342 million bushels of ending stocks for that 23-24 season. Let's take a look at wheat. Keep in mind, this is just after 1 quarter of demand. USDA says wheat stocks totaled 1.986 billion bushels. That's basically right on expectations. I mean, they were looking for 2 million bushels less, but that's a pretty small difference when you're estimating wheat supplies at this point in the year. That's up just over 200 million bushels from a year ago. And as with corn and soybeans, this is also the highest wheat supply total in 4 years. Uh, I, I should have mentioned I had the on-farm numbers. Sorry, let me go back to corn again. For corn, 780 million bushels of corn were still held on farm by the September 1st date. So that is up from a year ago, but the percentage of corn supplies, 44%, is still in line. So it's still a lot of old crop corn out there that needs to come to market. I wanted to point that out. Soybean stocks, the 111 million bushels of soybeans still held on the farm. That is not really seen as a problem, I don't think, as far as soybean supplies go. And now for wheat demand again, wheat on the farm, 664 million bushels. That's just 30% of the total supply total. So wheat seems to be moving along fairly well off the farm into the different channels. First quarter wheat demand with today's stocks number comes out to 803 million bushels. That's the most wheat demand we've seen in 3 years. And keep in mind, even though wheat export sales are up significantly, over 30% from a year ago, not much of that has shipped yet. So it's not really showing up in the drawdown on the wheat stocks just yet. It'll take a little time for those to turn into shipments. In the small grain summary, basically, for our purposes, we're looking at the wheat production estimates from USDA, and just as a backdrop here, Dow Jones survey basically was looking at wheat production estimates that would stay in line with what USDA said back in August. Well, the actual number for U.S. wheat production came in at 1.971 billion bushels. That's up from 1.812 billion bushels a year ago, but very close to expectations. It was just 13 million bushels below what the analysts in Dow Jones survey said they expected late last week. The 13 million bushel reduction was basically divided up between hard red winter wheat and white winter wheat. So hard red winter wheat came in at 770. That was 6 million bushels less than expected. The white winter production estimate came in at 236. That was 7 million bushels less than expected. Everything else was pretty close to expectations. There you can see the total winter wheat crop, 1.349 billion bushels, up from a year ago. That's not really a surprise. We know we had better soil moisture conditions for, especially in the western U.S. Versus a year ago. So no big surprises here. And if anything, maybe a little relief that there were no big surprises, no big jumps in the production estimate numbers. The other spring wheat crop is bigger than a year ago, especially North Dakota, as we'll see in a minute. 554 million bushel total versus 505 last year. And for durum, it came in slightly higher than expected at 80 million bushels. That's up from 59 million bushels a year ago. Let's take a look. I did have time to visually put together a map of how the wheat production looks this year. So I went ahead and did that. And I think for the third year in a row now, we're seeing North Dakota is the top U.S. wheat producer in the country. Even though Kansas had a better year, they came in as the king of wheat, almost 368 million bushels. These numbers are in million bushels, by the way. Kansas was second, 307 and a half. Montana had a good year, 172. And a bit of a surprise to me, still coming in fourth was the state of Washington, even though they had a very, very dry summer and dry finish to the year. They came in almost 144 million bushels. So you can see where the wheat production is spread out through the country there. Now let me show you just how it compared to a year ago, the 1 year change. The big winner as far as improving from a year ago was Kansas, had 106 million bushels of production more than a year ago, according to USDA's summary today. North Dakota had a very good year for their wheat production, 61 million bushels. Montana was a little dry, down 13. And of course, you notice the red blotch over the eastern Midwest. A lot of that SRW wheat production was down because of acres, not because of bad yields necessarily. But we had fewer plantings in the east this year. If there is any surprise on the map, I expected Washington to be lower this year because of the dry situation. But of course, they had a very dry situation a year ago also. So they actually gained 30 million bushels of wheat production this year. But this is basically how it went compared to a year ago. What are prices doing? This is not this is not a real-time chart in front of you, but it was taken before we got together for our webinar here, and they were trading higher. Let me just go. Now I can tell us December corn's up 7.5 at 425.5. November beans are down a fraction, and the wheat prices are up anywhere from 7.75 to 13.75. So corn and wheat trading higher today. On the charts, as you can see here, the one thing I did wanted to point out, of course, it looks like we're going to close near our highs for September in corn, and unless soybeans falls off very much, looks like they're going to be there near their highs of the month. The harvest low typically comes in early October. I think it seems fair to say that it looks like the harvest lows have come early this year. And I attribute that to just very, very heavy selling earlier this summer. Not only did we have good weather, pressuring prices lower, but we had a real strong response from the spec crowd and especially the funds in particular, and they sold often and early. And I think that just kind of set us up to have an earlier than normal harvest low, even though we're still expecting very good corn and soybean crops this year. It's nice to see some recognition for the demand side of the market, something I talked about at the farm shows this summer in Boone, Iowa and Grand Island, Nebraska. So we continue to see more appreciation for the demand side of the market, and that's nice to see now. On both of these, we're just getting up close to the 100-day averages, so we'll see if that keeps a lid on things or if they're able to push through that. But so far, the higher prices are being accepted by the market. That's good news. And overall, it looks like today's report is helping that out. In conclusion, we didn't have a lot of numbers to talk about today, so it is a little shorter than usual. But I'll say I think the report was obviously bullish for corn to see the corn stocks come in that much less than expected. Very good news again for the demand side of corn and the demand and the need and the value of corn at these cheaper prices. So that was a very good showing for corn. Soybeans, I'm calling it neutral to bullish. We did have slightly lower stocks, but I can't say it was a real shocking change. 342 million bushels is still a 4-year high. And then on wheat, I call it a neutral report today. We did have slightly lower than expected wheat production for the year. And if anything, there's probably a little relief in the market today that USDA didn't come up with a higher production estimate. So that's pretty much how I see it for the day. Greg, if you have any questions, I'll be glad to field those now.
Yeah, I'd add, if anybody has any questions, please pull those in. I would ask one, Todd. I mean, and you talked about on the front end, and you just hit now that demand for all the grains has been pretty solid, and that has helped take some of the sting off of what we knew all along. It looked like was going to be a pretty good yield this year. We're also, seeing the move that the Fed made, and we're seeing some other relatively positive economic signs. So that hopefully continues to see demand for all kinds of commodities, including grains, be pretty strong. Anything
Yeah.
on the horizon that worries you? I mean, we're into harvest now. We are getting a good feeling for what harvest is looking like, and we're not seeing any huge surprises there. Anything on your worry list at this moment?
Yeah, well, the big worry of what's up ahead, Greg, is just how big is this soybean crop going to be in Brazil? And right now, we're getting a little relief from that because they're getting a late start planting that soybean crop. And that probably won't necessarily hurt the soybean crop, but it'll kind of pinch the time frame for the corn crop that follows the soybeans. But right now, the way it is, USDA and others are expecting a record soybean crop in Brazil in early 2025 of about 6.2 billion bushels. So that's the big concern. The nice thing is, because we are the cheapest soybean provider right now, we're still in our active export sales period, and hopefully continue to be active in selling the soybeans at least until maybe December, or when we get closer to January, when we'll learn more about just what the conditions and the situation looks like for that next Brazilian soybean crop. But far and away, I think that's the biggest bearish concern on the horizon at the moment.
A question just popped in sort of related to that on exports. With this being an election year, is that helping drive exports at the moment, or possibly hindering? Or are people stepping up to buy, thinking that we might have a change in administration, or was something unknown might be happening in administration? Or do you think it's kind of an even keel on that?
Well, that's a good question. Overall, I would say politics don't necessarily have much impact on that, but of course, um, this presidential election will weigh in on what our new treatment of China will be. And so there's always a concern, because when pre former President Trump was in office, we got into a pretty strong tariff battle with China, and China tried not to buy soybeans from the U.S. as much as possible. So we lost about 2 years of good soybean demand there. So I'm sure that's on the minds of many of, is that type of scenario going to happen again? Um, but as far as the current pace, really, I think it's been driven by price. Just in the last month and a half, we've really seen the price of U.S. soybeans fall dramatically compared to the price of soybeans in Brazil. So that tells me that Brazil ran out of their soybean harvest supplies. We're obviously anticipating a record crop here in the U.S. Our prices are roughly 80 to 90 cents per bushel cheaper than the going FOB prices in Brazil. So the market's just taking advantage of that cheaper opportunity that we have right now, is how I see it.
Excellent. That's all the questions right now. Yep, it looks like that's the ones that have come in. I want to thank everyone for joining today. And as a reminder, this event has been recorded, and you can go to the dtn.com website within the next 2 business days, and you'll see a recording of this if you want to share it with others or re-listen to some of the areas. And I want to thank everybody for participating in this. I especially, before we sign off today, want to thank Todd Hultman. As some of you may know, but we'll be talking about more broadly, Todd is getting ready to retire. We're going to keep him around some, so he's not getting away from us completely, but he is going to be stepping back a little bit, and we'll be announcing our new lead analyst here in the coming days. When you join us for the WASD on October 11th, which will be our next webinar, we'll have our new analyst on at that time, and both he and Todd will be there. But I just want to thank Todd publicly for the leadership that he's shown over the last many, many years as our lead analyst. He's been a steady hand at the tiller in helping farmers figure out what's going on with these markets, always thoughtful and always with the farmer's interest in mind as he talked about these things. So Todd, just want to thank you very, very much.
Thank you very much, Greg, and thanks everybody. It's been a great ride, and I just have nothing but good thoughts.
Well, I'm sure you'll be appreciating not having to get up at 4 o'clock in the morning to watch overnight markets.
That part I won't miss. Yeah.
Absolutely, absolutely. Well, again, our next webinar will be October the 11th. That's the October WASD. I'll hope you'll join then. You can sign up for that webinar also at the dtn.com website, just as you signed up for this one. And we'll continue to follow up on the markets through the rest of our DTN online platforms, as well through the pages of Progressive Farmer Magazine. Until then, I want to thank everybody for joining. I just want to say, let's keep our friends and neighbors who were in the path of Hurricane Helena in mind. A lot of devastation going on there, and our hearts are out to those folks as we go through our week this week. Thanks again for joining, and have a great work week.
Thanks all.